It is Sunday, May 24th, 2026, and I'm going to give a BX market weather report for the week. So I'll be sharing charts that I believe help to tell what is going on throughout the market. We start here with the S&P 500 ETF, the SPY. We've got the year-to-date chart on the daily chart here, so each of these is 1 day. And I have the 5 EMA, the 21 EMA, the 89 EMA, and the 377 EMA on my chart. And below the chart I have these indicators of momentum. The BX Fast, I explained in detail what each of these are in last week's video. This is the short-term momentum, the BX Fast. The BX Mid is the mid-term momentum, and the BX Slow is the long-term momentum. So we can see here that we've got the long-term momentum in the SPY is building in green, and same in the midterm, and the short-term momentum is starting to increase. So that's why it shifted here from dark red to light red. And so this SPY is our primary gauge of how the market is doing. So everything looks good. We did have a 3-day pullback here, and if I turn on some other short-term EMAs here, like the 8 and the 13, then you can see in this pullback we did come down below the 8, and down to the 13 was as low as we got there on the SPY. Then to look at the market breadth, we use the RSP, which is the equal weight S&P 500, and it is finally breaking out as it broke above this key level where it had been finding resistance here around 200, and it's broken above that level here on Friday, and we have all of our momentum indicators on bright green. So that was something we were worried about last week, is that market breadth was looking kind of weak, but here, according to this equal weight S&P 500, market breadth is definitely starting to improve. And another way that we look at the breadth of the S&P 500 is with this S5FI. This is the percent of S&P 500 stocks that are above their 50-day moving average. And we can see, looking at these BX indicators, momentum is improving in the number of stocks above their 50-day moving average. And I also like to look at S5TH, which is the percent of S&P 500 stocks above their 200-day moving average. That is also improving on all time frames. So that bodes well for the strength of the S&P 500. We have market breadth improving this week. The other major indexes that we follow, the NASDAQ Composite, looks very similar. The only difference here between this and the SPY is that we do not yet have the short-term momentum increasing. We would like to see this change from dark red to light red in the next few days. The NASDAQ 100, very similar. And the NASDAQ 100 equal weight looking a little better, as we can see the short-term momentum is green here. So the breadth in the NASDAQ 100 is also good. We have more and more stocks participating in the rally. And the next major index is the Dow. Also looking good. The long-term momentum looks like it wants to turn green here pretty soon. Midterm is green, and the short term is green. We have it looking like it was trying to break out here on Friday. Next major index is the S&P 400 mid caps. So not quite as strong as the other indexes. When it pulled back, it did break below the 21, whereas SPY and the NASDAQ did not ever come close to, they stayed well above their 21 day. The mid caps did break well below the 21. In fact, if we turn on some of the other midterm EMAs like the 34 and the 55, we can see mid caps came down to the 55 day moving average and then found a bounce there. But the short-term momentum is gaining, as well as the midterm did flip back to bright green here. So everything is looking good here on the mid caps. And the small cap IWM, Russell 2000. I've got some lines on here. This is where I was, where I'm trading this. But we can see similar story to the mid caps. It did break below the 21 EMA before finding some support down here, probably around the 55, and then bouncing back up. All of the momentum indicators are looking good here. So those are the major indexes that we follow. Another ETF we can use to gauge how the growth stocks are doing is the FFTY. That's the IBD 50. And so here the this is similar to the Qs, except we have midterm hasn't flipped back to bright green yet. Short-term momentum has not turned to light red yet. So so growth stocks starting to come back from that pullback, but not quite as strong. And finally, I'd like to look at the volatility index, the VIX. We want this to be low. It's currently sitting at a 16 handle, and we want these BX indicators. We want momentum to be fading in all of these, and it is. We've got dark red and dark green, and we've got the VIX below all of the moving averages. This is a good sign. Low volatility in the market that's conducive to swing trading and position trading. Next, I'd like to take a look at the 11 Spider sector ETFs, and we'll start with the XLY, the discretionary sector. These dark green lines, these are previous all-time high monthly closes, and so our green line breakouts. This is a prior green line breakout at 116, and then we have a new GLB up here at 121, and we've got XLY kind of hovering in between those two green lines. So looking for it to break out above this this higher dark green line. We do have momentum looking good on all three time frames. Next is the healthcare sector, XLV, and you can see that on Friday the BX mid did turn green. That's a signal for me to open a position in it. So it hopped above the 89-day moving average, and BX mid turned green. BX Slow turned from dark red to light red. So it looks like the healthcare sector is trying to come back to life here. And we do have a GLB up here at 157. It's currently trading at 149. We'd like to see a push towards that 157 area, see what it's going to do there. Next is XLP, consumer staples sector. Its short-term momentum is fading, but we do see that the long-term and mid-term momentum is still positive. And it's also in between two GLBs. Next is the energy sector, XLE. It has pulled back to its 21 EMA. It looks like it's trying to find a bounce there. The short-term momentum is still positive but fading, and long-term and mid-term are looking okay. It's been very volatile, so I've avoided trading XLE, but this could potentially be, if we could see this short-term momentum turn green, this could be a good entry for XLE off of the 21 EMA there. Next is XLRE, the real estate sector. We do have all three time frames bright green, long term, mid term, and short term. And next is XLK. This has been the leading sector. It looks very similar to the Qs. We've got long term, mid term, and short term all looking good. Notice as opposed to the NASDAQ, the XLK, the short term momentum is rising in light red there. So this has been the leading sector. Really the primary source of the rally over the last month or so. Next is the XLB, the material sector. Not looking so good. We've got dark green on the long term. We've got dark red on the mid term, and short term is trying to gain some momentum. So avoiding that. The industrial sector, XLI. Not so good. We've got the long-term fading. We've got mid-term fading to red. Trying to pick up some steam short-term, though. XLC, the communication sector. Dark red on the long-term. Fading dark green on the mid-term, dark red on the short-term. Looks like it's forming a pretty tight base here, but we'd like to see these momentum indicators start to turn favorably before we get involved. Financial sector, also dark red on the long-term. It is gaining some mid-term and short-term momentum, and it is right below a GLB. This is a previous all-time monthly high. So we'd like to see it break out above this and see the long-term momentum start to turn a light red before we get involved. And finally, the last of the 11 sector ETFs is the utility sector, XLU. We've got the long-term dark red, mid-term starting to improve, and short-term starting to improve. We need to see further strength in this to turn the long-term momentum to light red before we would get involved. But just looking at these 11 sectors, I do have this color-coded by the color of the BX Slow, where blue means dark green, pink means the light red. And so we can see, even though XLK has been leading the charge, we do have other sectors that are showing some momentum strength. I'd like to look at some other areas of the market. Let's look at GLD for gold. Definitely not good. We've got red on all 3 time frames. So I do think this is going to go again eventually, but it's definitely not ready yet. And silver, very similar story. The long term has not quite turned red yet, but it's fading in dark green. And Bitcoin. Bitcoin had been showing some strength, then it lost the 21 EMA here, and the mid turned to dark green. So we're looking for this to come back above the 21 EMA before we get involved with it again. We want to see this midterm turn to bright green. And some other things to keep an eye on. The US dollar index, DXY. Generally, seeing DXY go lower will be good for stocks. So you can see it's coming up against resistance here at this 377 EMA. It's below the 377, and it's found resistance there every time it's approached it. And also, something that's been driving the market here recently is I look at the 10-year Treasury yield. We did have a spike here. This was Friday, Monday, and Tuesday. While it was spiking, stocks were falling, and then the yield started to come down. It's now below the 5 EMA. Let's look at some short-term moving averages here. Let's turn on the 8 and 13, see how it's doing against those. So it is pretty much right at the 8. We would like to see it fail below this 8 EMA. If we had any kind of bounce in here, this would be bad for stocks. Okay, so that's my overview of how the market is doing here on May 24th, 2026. The markets are closed on Monday, and we'll have a 4-day week this week. I'll come back next week to show you how the markets look through my BX momentum lens.